Hey, what's going on, family? Today we're going to talk about Intel because I don't know if you guys seen this article. It's been like the buzz news for Intel stock, but Intel dropped 8%. This is after Intel reported a massive loss in their foundry business. Now, here's a chart for Intel. Our price prediction in Intel goes all the way back to the beginning or the ending of January. Here it is, April. And the market is still signifying weakness. It looked like we finally got that news, the information to break the market buyers from holding price in Intel. It finally broke yesterday and the volume was heavy. So this buy zone right here, we may need to get rid of it and anticipate some continued weakness into the market in Intel. But first, let's get to this. Let's get to this article. Intel shares dropped 8% Wednesday after the company disclosed long-awaited financials for its semiconductor manufacturing or foundry business, revealing an operating loss of $7 billion in 2023. Intel, what in the world are you guys doing? $7 billion. Do they not know how to manufacture semiconductor chips? They've been in this business for an extremely long period of time. Maybe the competition is so far advanced, i.e. NVIDIA, AMD, that Intel is trying to they're trying to go back to the drawing board and create another competitor that can compete with these other two massive semiconductor stocks to where they lost $7 billion. If you're trying to lose investor confidence, that's how you do it right there. Have an operating loss of $7 billion in 1 year. It was the first time Intel had reported revenue totals for its foundry arm alone, separated from the products business. Everyone's looking for Intel to break off into this chip manufacturing race, especially for America. America wants to become a standalone entity in the semiconductor chip space. They don't be reliable. They don't want to rely upon China or any other country to produce the chips. America wants to do it in-house. So they're looking for Intel, like, hey, Intel, you guys are American based. I need y'all to try to put something together to where we can get the chips from you all. And we won't have to outsource it to another country or another business that is sourced in another country. So they do have, and I'm talking about Intel, they do have the backing of the government of the United States. Okay. So Intel shares closed down 8% on Wednesday after the company disclosed long-awaited financials for its semiconductor manufacturing business, revealing operating loss of $7 billion. It was the first time Intel had reported revenue totals for its foundry arm alone, separated from the products business, which reported $11.3 billion in operating income in 2023. It's not bad. Intel said Tuesday that it expects its foundry losses to peak in 2024 and break even halfway between current quarter and the end of 2030. 4 more years? Do you really think Intel has time for that? Analysts at Cantor Fitzgerald, maintaining their neutral rating and $50 price target on the stock, lauded the company for its new financial reporting structure, but wrote that Intel would need to drive its foundry and product operating margins higher. Quote, now is when the real work begins. End quote. The analyst wrote in a Tuesday investor note. Quote, of course, this would take time, particularly with Intel's planned manufacturing leadership truly ramping in 2027. So there, look like Cantor Fitzgerald is in it for the long term. Stifel analysts wrote that they continue to view Intel's strategic plans positively in a note Tuesday, while reiterating a hold rating and a target price of $45 on the stock. So get this. Now, make this make sense, okay? We have these two analysts, Stifel and Cantor Fitzgerald. They're trying to tell the people who views their content that they still feel positive that in 2027 by the time 2030 rolls around, that Intel will be in a better position now. Okay, cool. It may be. But when you look at the chart for Intel, it doesn't look like that. It doesn't look like the market is taking this information positively, because if it was, then the market in Intel would suspectedly, in my opinion, would have bounced off this buy zone, but it didn't. It closed below it. So now this buy zone is now invalidated. The buyers didn't show up. So Cantor Fitzgerald, Stifle, the analysts, while they're over there trying to talk positive about this situation, they should have came through the market and bought up Intel stock to make sure that it didn't fall below the buy zone, but it did. See, we pay attention to the market. We don't pay attention to what these analysts are talking about. Because if it doesn't match the price, then what they're saying is incorrect. But we'll see what happens in the next couple of years. Because I'm not looking for Intel to completely go to $5, nothing like that. But the current environment clearly shows you that this market is not taking the news positively or taking it positive. So we got this other target down here, $37.75. I think one of those analysts had what, $45? Okay. And the other one has 50. So yeah, 37. That's where I'm at. I'm not changing anything. The market in Intel is still showing me that the price is still weak. Look at that. Look at that 2-day bar right there. Here it is on the 3. Intel on the 5. That looks terrible. On the 5-day chart, we already got the clue that Intel was weak right here. That was our first clue. That one price bar completely stands out. It's different. It completely erased the prior 5-day bars, like maybe 6 of them in one bar. That's why I told you we were looking for the price to go down. And then we get this one right there. So the market is still confirming, especially in the next 8 hours, 38 minutes, if it closes on a low, that tells us that the market is still weak. It is on the weekly, a day and 9 hours. 2 weeks definitely looks massively weak there too. It is on the 3. It looks weak there too. So yeah, the chart is telling me that the market still views Intel as a weak stock. So what we're going to do is extend this over just a little bit. Give it a little bit more time. If you wanted to, it's nothing wrong with taking some of this off the table. That's 7.5% there. And just leave a little bit on for it to run down to this next buy zone. But yeah, that's it. Give me your thoughts. Make sure you maintain the profitability. And as always, trade different.